Okay, let's get started with Chapter 9, auditing, dealing with auditing sales and receivables. Now, you can see, let's just look at a basic transaction, sales transaction. On account, debit, AR, credit sales, and let's just ignore the PST and the GST. Okay. Now, in a control test, we'd also go through and make sure the company's charging the correct PST and GST. We might hit that later on, but let's just look at the basics first of all. Okay? So we make a sale here for, I don't know, let's just say it's $1,000. Right now, well, that's your basic sales transaction. That's it, right? Debit AR, credit cash. Or sorry, not credit cash, credit sales. Now it's up to us to determine, are we going to collect that cash? Okay, so again, we're going to be auditing sales and receivables. Usually we can't do one without the other. And we're going to want to trace that flow from AR, converting it into cash, going into the bank account, and make sure we get the $1,000. Okay. So our learning objectives will be to identify the audit objectives applicable to sales and receivables. Okay. Now we're going to describe the functions and control procedures normally found in information systems for processing sales, cash receipts, and sales adjustment transactions. We're going to outline the audit strategies and considerations, including the risk of material misstatement and test the controls for sales, cash receipts, and sales adjustment transactions. Okay. We're going to indicate the factors relevant to determining an acceptable level of detection risk and the audit of sales and receivables. And we're going to try and design a substantive audit program for sales and receivables. Again, they both tie into one another. So when we design this program, okay, to tell us how to audit, okay, we want to make sure that we hit every assertion, so we can be certain, well, so we can reduce that risk that we're going to, that detection risk. Okay? So we don't want to not be able to detect an error. Okay? So let's move on to page, now just a reminder, we're going to cover just page 9.1 to 9.5 today, and I'd like you to do review question 9.1 as well as PAQ 9.1 and 9.3. Do 9.3 the best you can because it has a couple other things in there, but it just wants you to look at the internal inherent risk weaknesses. Okay, so audit objectives. Well, let's go look at page number 1. Now, again, when we're looking at audit objectives, we want to understand what the key issues of this area is. So, sales and receivables. So with receivables, we want to be sure that the receivable actually exists. Well, how? Well, did we make that sale? Okay, 1. Is it collectible? It's great that we made the sale. But if it's not collectible, it's not even really a sale, really, because we're never going to get paid on that money. So we need to be sure that the receivable exists. How would we determine that? Well, we go in, okay, well, what's this AR amount related to? Well, it's related to invoice number 792 and 797. Okay, well, now let's pull up those two invoices. Let's trace it. Okay. Now, we vouch the invoice. Yeah, the invoice looks good. It was recorded at the right amount. Again, now our concern is, well, okay, the receivable must have existed, okay, because it's tied into the sale. But now we're concerned about, is it collectible? Okay, because if it's not collectible, we can't have a sale sitting at $1,000. So we want to make sure that the receivable actually existed and it's collectible, and also that adequate balances have been made for receivables that are doubtful in terms of their collectability. Now, on the sales side, we want to make sure that the sale is genuine and neither understated or overstated. Usually, we're looking at a scenario of sale. We don't want to overstate the sales. Okay? But at the same time, when the company's doing good, they might not want to report as much sales because why? Tax. Okay? They'll have to pay less tax if they can move a year's some sales into the next month. Okay? So that's what we really want to be looking at receivables. Okay, do they exist, and are they collectible, and do they have an adequate allowance attached to it? And with sales, we want to make sure that they are neither overstated nor they are understated. Okay. All right. So when we audit sales and receivables, one's tied into the next. The auditor's objective is to obtain sufficient and appropriate evidence about each significant assertion for the applicable classes of transaction and balance. So if we look on page 9.4, right, let's just say, okay, we are concerned with specific audit procedures for sales. Well, we want to make sure, we want to look at occurrence. Did the sale actually take place? Completeness. Something like, were all the goods shipped to the customers during the period where they all recorded? Okay, we want to make sure we've recorded all our sales. Okay. Now, we want accuracy. We're concerned about that. Cutoff. Did it occur in the prior period? Okay. So we would go through each of our assertions and tie that into the transaction. Okay? And we're going to test individual transactions. Now, to meet these objectives, an auditor may use a combination of tests of controls and standard procedures. Tests of controls are great. They're going to reduce a lot of our work. But if they don't have a good control mechanism in place, we're not going to be able to rely on those controls, and we're going to have to dive in and do a lot more substantive testing. That again means vouching, testing, looking at those invoices and tracing them step by step. So again, it's a lot of work. So, but that's what we got to do with an audit. Okay. So again, here is our audit procedures. Our audit objectives for sales and receivables that relate to our assertions. Okay? So we're going to use that later on when we get to the last section, which deals with creating a substantive test. So again, I'd like you to read from 9.1 to 9.4, to 9.5, and then answer those 3 questions up there. Again, this transaction here is the basis from what we're going to learn. And again, we're a company though. It's going to happen. We might have 1 million of these types of transactions. Okay? We just want to make sure that we are not overstating or understating our revenues. Okay, and ultimately that those receivables do exist and they're collected. Because if they're not, then we've got to make those adjustments. Okay. All right. And there's my phone. So on that note, we're going to wrap up today's brief lecture on auditing, and then we'll get back to it tomorrow. Okay, have a good day.